Okay, you guys, I want to go over a statement of cost of goods manufactured with you, an example there, and an example of how to calculate cost of goods sold on the income statement. So I thought I'm using the template from exercise 1.7. I'm just going to make up some numbers to put in, and we'll work through it. On some I'm going to get from an example in the text, but you'll be able to find all of these amounts fairly easily in the problem, I think. Or some of them we're having to calculate on the statement of cost of goods manufactured. So you'll see here on the video how to calculate those. Alright, so we know when we're manufacturing a product we have really three costs: materials, labor, and factory overhead. Okay, so we'll start with materials. Now we want to work toward cost of materials used in production in this first little materials section. So we're going to start with inventory of materials on January 1st, the beginning of this month. And in my example, I'm going to say 0. You know, you guys, that means this business probably just started. Yours in exercise 1-7, they do give you a beginning inventory balance. Okay, and then we're going to add to that our purchases of materials that took place during the month. Here I went with 25,000. We'll add that to the inventory of materials on January 1st, in this case 0, and then the total cost of available materials, 25,000. Now here's a number you have to calculate. It's just beginning inventory, or inventory in this case on the first day of the month, plus purchases of materials that month. I'm saying inventory, but this inventory of materials obviously, and that gets us the total cost of available materials. Okay, you guys, that should make sense. If we take what we had in materials inventory to start the year, and we add to that materials purchased during the year, that'll give us the total cost of available materials. Then we want to subtract out the cost of materials left at the end of the period. So less inventory of materials on January 31st, $4,500, leaves us with cost of materials used, $20,995. Again, I'm just making up these numbers. Or some of them I am. Purchases, this one was the sum of the first two. Now I made up the ending inventory number, or got it from an example in the book. But then to get cost of materials used, you just take your total cost of available materials, subtract the inventory materials at the end of the period, and then get you the cost of materials used. Then you want to deduct out the cost of the indirect materials. You can find that in the problem. You can find it in your problem. I'm just making up the number here for the example. I use $995, which will subtract from cost of materials used. And that gets us the cost of direct materials used in production. In our example, $20,000. That section of your exercise 1-7 would be worked out the same way. You just have to pick up your purchases, ending inventory, indirect materials, and beginning inventory. Those numbers come from the problem itself. Alright, then you'll just pick up the direct labor number from the problem. I'm going to use $10,000. Okay, so far we've got cost of direct materials used in this month's production, and we have our direct labor cost for the month. Now let's go to the third component of the cost of manufacturing a product, factory overhead. Alright, we want to list indirect materials and indirect labor. Both indirect materials and indirect labor would be considered factory overhead. I went with $9.95. We've already seen that number for indirect materials. And then indirect labor, picked up $3,500. And you'll have to look for that in the factory overhead breakdown in your problem. And then I just went with an other category. That's how you'll have to work it in exercise 1-7. They'll give you a breakdown of factory overhead. They'll tell you how much of the factory overhead was indirect materials, how much was indirect labor, and then they give you a total. Well, if it's not indirect materials and it's not indirect labor, but it's in that factory overhead total, we're just going to count that in we'll catch all that we call other. I went here with 3,725. Okay, and then we're going to add these three together to get total factory overhead. And in our example, that's $8,220. So we now have our three costs of manufacturing the product. Direct materials cost for what we actually produced in the month of January here was $20,000. Direct labor, $10,000. And our total factory overhead, $8,220. And we just want to add those together, and that gets us our total manufacturing cost. Sorry, I didn't do that correctly. We want to sum these three. That gets us our total manufacturing cost of $38,220. Now we want to add in work in process inventory on January 1st. I said that was $2,000. So we'll add those two together. That gives us a total of $40,220. Then from the $40,220, we're going to deduct work in process January 31. There we go. I picked $3,000 for that amount, but we would deduct ending work in process to get to the cost of goods manufactured that month. That's going to be $37,220. Now, why are we doing this last part? Well, we added up our total manufacturing cost. It's just the cost of direct materials used in production, plus direct labor, plus total factory overhead. We want to add work in process to start the month because even though those items were began in a previous month, they were finished in the month of January in this case, so they'd be a part of this month's cost of goods manufactured. We deduct out work in process at the end of the month because that'll be included in February's cost of goods manufactured. Okay, it should not be picked up here. Now, after going over this one with me, I know some of the numbers I just kind of made up on the spot, but you'll be given in your problem inventory at the start of the month, purchases. You add those together to get total cost of available materials. You deduct the inventory balance of materials at the end of the month to get cost of materials used. This number, the ending inventory materials, will be given in the problem. So with indirect materials, we deduct those from cost of materials used to get the cost of direct materials used in production. We subtract out those indirect materials because they'll be a part of factory overhead. All right, then the direct labor amount for the month is just given in the problem. You'll find your indirect materials and indirect labor with the factory overhead balance. I pulled out the indirect materials here, the indirect labor here. Then you'd find the other amount by subtracting indirect materials and indirect labor from total factory overhead. You'll notice that's the way they try to make that exercise a little tricky in the book. All right, so now we add these three together to get total factory overhead. We add it together with direct labor and cost of direct materials used in production. You get total manufacturing cost. Then again, once we're at that point, we're going to add beginning work in process inventory. Because those items were finished in the month of January, they should be part of January's cost of goods manufactured. We'll add that to the total manufacturing cost. Then we're going to deduct out the work in process balance at the end of January, because those items will get finished in February and included in February's cost of goods manufactured. So again, you subtract that 3,000 to get to our ending number. And a lot of these numbers, again, I told you which ones I've made up and which ones you had a little arithmetic on or whatever. Most of them you'll find in the problem, or you'll have to add or subtract to get them. They're on that exercise 1-7. Good luck with it, or this portion of it. Let's finish it up. We also want to do the cost of goods sold section of the income statement. Alright, we would start with our finished goods inventory balance on January 1st. This time, in my example, it's 0. But then we would add to that our cost of goods manufactured from right here, 37,220. Okay, and then when we add those together, we get cost of goods available for sale of 37,220. Then we deduct out finished goods inventory at the end of the month. You can find these numbers in your problem, except for what this cost of merchandise manufactured comes from up here. And then that difference, that ending amount, is just your cost of goods sold. And that amounts to $29,576. So here on your cost, to calculate cost of goods sold, you take the finished goods inventory balance to start the period. Would not have to be 0, just look for that beginning balance for finished goods inventory. Add the cost of merchandise manufactured, which you would get from, or you could call that cost of goods manufactured, which you get from your bottom row of the statement of cost of goods manufactured. So we'd add those two together, the beginning finished goods balance plus the cost of merchandise manufactured during the period. They give us the cost of goods available for sale. Then we deduct out our finished goods inventory balance at the end of the month, and that'll give us cost of goods sold. So you guys, I think after watching this video, just looking for these numbers in the problem, you won't have any trouble with this one. It's worked out on this very template. Good luck, and if you have any questions, please be in touch with me.